Hey guys, this is a market update. In this video, we're going to be looking at certain price levels and also trend levels for Bitcoin because we're still in this bull cycle and obviously the price has moved up a lot. This is my longer term trend analysis. So we're going to be looking at, where should we be taking risk? Where is the Bitcoin price a little bit overextended? And if it is getting overextended, what drawdowns can we expect? So we'll go through that in this video. Firstly, coming to BTC, you can see that Bitcoin is just repricing at this point. We're not really in a trend anymore, right? So this is a trend, right? Kind of a grinding trend. What we're doing now is just repricing the asset because of a fundamental change in the landscape. The ETFs are pretty much a done deal, I think, at this point, right? Now, there's always something that can go wrong, but we'll look at some of the news flow in a second where, it just seems like the SEC is actually just crossing the T's, dotting the I's to get this stuff done. And so that's a big deal, right? And so the market is now saying, we now think this is happening, the ETFs, and so we're going to reprice the asset accordingly. And so what you're seeing here is just kind of runaway repricing price action. So if we look down into this, you can see I draw this green box a long time ago here. There's a lot of price action in here, as you can see, but we just basically, saw through this like a knife through butter. Can see here we had resistance here that played out. We had this amazing ascending triangle here which played out perfectly for this pattern. So if you traded that pattern, obviously that worked out. And then we've just gone through this entire price action. Now we're meeting resistance at this level, which you would expect it to meet resistance at, because if you go back to the chart here, you can just see from the previous price action here, there's a lot of support and resistance around here. So support and resistance does work to give you key price levels. Obviously, you have to look at fundamentals as to how you're going to be trading around that. You're breaking through those to the upside or the downside. So you can see here the ETFs are just so close. We're 6 weeks away, right? And so I wouldn't be looking for any real dips unless you get kind of something in news flow that suggests they're not coming. If they're not coming, we're going to get a really, really big dip, obviously. But it seems like they're coming. So the asset is repricing at this point. I've drawn a line here at around 50,000 because that's important in the longer term trend, which I'll get onto in a second. If you are a trader, check out Bybit, link in description, make a deposit on there and trade up to $30,000 as a deposit bonus. Not available for every country, so just check the details via the links below. What we need to be looking at is where are the key price levels and do we want to trade underneath those, right? Because if you're looking to trade, a lot of people are getting into crypto again and saying, is 40K too much? We're going to get a drawdown. So I think you just need to zoom out a little bit and say, where are key price levels? Where are we in the trend? So here is the realized price distribution for BTC. This is on-chain data. You don't get this for any other asset, like just crypto, right? So on-chain, you can see big support levels and resistance levels. This trade right here between around 30 to 40,000. We just literally shot straight through this whole thing, right? Which is insane. So we're now meeting a little bit of resistance here. You don't really have much until about 47. So call that 50K, right? So from here, you've got this entire price action here where, 50K would be, another area where a lot of people got in at. And so when they got in there, are you thinking, do they want to break even at that price? Are they willing to hold? We're clearly in an uptrend now, but, there's not a lot of resistance here up until 50K if you're looking at on-chain. Right, so 50K is another price level, which if the ETFs come, you would expect to be up there. Just from on-chain, just from technicals, you can see that. Of course, we don't know if the ETFs are going to come or not, but the probability is getting a lot higher. In terms of the longer-term price cycle here, this is the very long-term Bitcoin price cycle and logarithmic regression chart for pretty much its whole history. So I break market phases into three. You have the expansion phase in green. You have the destruction phase, so the drawdowns, bear markets in red, and then you have the recovery in yellow. So how do we usually trade? You can see this. We have the drawdown. We have an area of recovery before the Bitcoin halving. After the halving, you get the expansion. Now we've had this drawdown. We're very clearly in the recovery now, and we're doing very, very, very well for this part of the cycle, which is of course a little bit worrying usually because as you can see in the previous cycle, we went up and then we had the pandemic. Now, probably not going to have that again, right? It's a black swan. We don't know. ETFs getting rejected or something going wrong with them. We'll see us draw down again. But you can see here, essentially, anything under this your orange line, I'm going to be buying because that is towards the bottom end of Bitcoin's price cycle, given that I assume the long-term trend is to the upside. 15 years of that trend has happened. So, we can suggest it will go on for another, however long. I think, for a very long time, but we won't get into that. As you can see here, under this trend, right? Now, I said 50K was pretty much a key level from technicals and also the on-chain. You can see that Bitcoin's trend right here is trending to around the halving date of around 50K as well. So that price is a very key price. And for me, once we break that, then you're just going on to a new all-time high, whatever that may be. So for me personally, anything under that level, around 50, I think it's pretty much just business as normal. Just being very consistent with buys. Anything over here, maybe you can start to have a conversation with yourself about what you actually want. What is your 6 to 12 month view at that point? Do you need cash for short-term liabilities for the next 2 years? Do you want to rearrange your portfolio a little bit towards the end of the end of the bull market, where you want to, maybe you're a little bit overexposed to crypto. Maybe you think, actually, do you know what? I actually need to maybe put some money elsewhere and just do whatever for your own lifestyle. So that's where conversations can happen. For right now, anything under this orange line for price and now before the halving in terms of time is just still buying. And the ETFs may actually force us up a little bit higher. We just don't know how we're going to react there. But you can see what's happening. So this part of the cycle seems to be accelerating a lot quicker than on previous occasions. And I think that's because we have a lot more visibility in the press. And it's kind of the first time that Bitcoin is kind of a mainstream asset for a halving, right? Even with this one, it wasn't really mainstream. It got mainstream towards the peak of the bull market. It's now mainstream and known with the ETFs and the halving. And so this is a key bull market, I think, and we could see a lot of a price appreciation and very quickly. But in terms of understanding where we are on the price cycle, we're nowhere near the tail end of it, right? This would be usually the time horizon for a bull market top, somewhere around here. So we're nowhere near that, and we are still towards the bottom end of its price cycle. So for me, just it's a no-brainer what we're doing right here. Up here, you can have conversations with yourself, and that's going to be up to the individual trader. Coming to the ETFs, both Bitcoin and Ethereum ETFs seem to be pretty much nailed on. So for Bitcoin, this has never happened before. SEC before always just denied everything. Now they're working with issuers to amend all of their applications to get them in line for what? Well, obviously an approval. There's no other reason why you do this. This one is from BlackRock. SEC is obviously giving multiple issuers the same or very similar instructions. Amendment to applications to make sure that they are in line for approvals. Bitwise here did the same thing. So this is moving on. It looks like they're all getting ready for that deadline, which would be between the 5th and 10th of January for the Bitcoin ETFs, potentially all of them getting approved at the same time. This is Ethereum here, and we see the ETH ETF showdown looks to be finalized in May after the halving and hopefully post a Bitcoin ETF approval. This is Ethereum here. There's a lot less info on Ethereum in terms of what's happening here, whether they will actually be accepted, whether they'll be denied, or how these guys are actually applying. This is down the line a little bit, and we don't know if the SEC is going to approve all of them at once, like with Bitcoin, or maybe they're just going to approve one by one, like they usually do with ETFs, based on when you actually apply. But we've got Fidelity, BlackRock here, which is iShares, Invesco, VanEck. These are the big boys coming in again. So, potentially around May. We don't know on that one, but you've got ETH and Bitcoin being brought into ETFs. It's not the ETFs that are the big deal, although they are great for a lot of people that want to hold in those products. It's really the signal to say these two assets are institutional grade and we're allowing them to trade. So the price of them, it will be the price dependent on what the assets are underlying, right? But what it is these assets are coming into the mainstream, and the government basically is giving you the okay that these two things are okay to trade and go ahead. So that's the signal, and that's why we're repricing. You can trade this short term, or you can just obviously invest in the assets that you think are going to outperform because of their fundamental value. The other reason we're pumping is the macro cycle has changed, and this is the real flood that is going to push Bitcoin to new all-time highs. You can see here the inflation rate. So, after all of that stimulus, the inflation rate went up. central banks raised rates, took money out of the economy. That's when Bitcoin got destroyed in its price. Inflation is now coming down, inflecting way down into target. From here, the market is now pricing in no more rate hikes, rate cuts next year, stimulus potentially. We don't know how that's going to play out, but stimulus and rate cuts is usually how it works. And so that's obviously extremely good for BTC. So the market is pricing it in before it happens because all of this data is lagging. So it's important to know where we are in the macro cycle because Bitcoin is the macro cycle. This is the Atlanta Fed's estimate of GDP falling off a cliff. There is no reason for central banks to remain hawkish, and so they will not do so. And they will start to move towards trying to support the economy if it is slow. And so that's what Bitcoin reacts to. We're reacting to it now, and obviously we've got a long way to go for this bull market. There's going to be a lot of volatility in between, but everything is lining up just as before. If you are a trader, check out Bybit, deposit bonus up to 30K, link in description. I'm going to be making some updates to the crypto investor course towards the end of the year as well. If you've got the course already, they're completely free for you. You can check out the course down below as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.